All right, let's dive right in. We're looking at one analyst's pretty bold prediction for what could be a total roller coaster of a week in the markets. They're basically calling it a huge stress test for crypto, and, well, we're about to break down exactly why. So, yeah, no beating around the bush here. The analyst we're looking at from El Caro Trade puts it very simply. Their forecasts for the next few days, this week will be brutal. That's it. That's the tweet. So, what's behind that? So, how are we going to unpack that brutal forecast? Well, here's the plan. We'll start with the big drivers of volatility, then dig into what the Federal Reserve is signaling. After that, we'll tackle the threat of a government shutdown and, get this, a pretty wild theory involving geopolitics, oil, and even Greenland. And of course, we'll wrap it all up with the final market forecast. Okay, first up, this week of volatility. The main idea here, and this is really important, is that it's not just one thing we have to worry about. Nope. It's like this perfect storm, a collision of four huge events all hitting at basically the same time. So what are these four pressure points? You've got the U.S. Federal Reserve meeting, then there's the potential for a U.S. government shutdown, add to that some escalating geopolitical theories we'll get into, and just to spice things up, you've got mega cap earnings reports from giants like Microsoft, Apple, and Tesla. It really is a recipe for some serious market jitters. All right, so let's zoom in on that first big event, the Federal Reserve's signal. Now, you might think it's all about whether they raise rates or not, right? Well, according to this analysis, the actual decision, that's not the main event. What we really need to be listening for is something way more subtle. Pretty much everyone on the street agrees nobody is expecting a rate cut at this meeting on January 28th. That's kind of baked in already. So the surprise isn't going to come from there. So here's the real kicker. It's all about the vibe, the tone of Jerome Powell's speech after the decision. Is he going to sound hawkish? Really tough on inflation, hinting that rates are staying high for longer? Or is he going to be more dovish, maybe signaling they're ready to ease up and cut rates down the road? This analyst is betting that his choice of words, that's what's going to move the market. Okay, moving on to the next big cloud on the horizon, the threat of a U.S. government shutdown. And look, this isn't just about the political drama in Washington. The analyst is zeroing in on what this means specifically for anyone trading the markets. And they're not just saying it might happen. No, they're putting a number on it. The analyst believes there's an over 80% chance of a shutdown. So in their book, it's pretty much a done deal. So why should we care? What does a shutdown actually do to the markets? Well, it triggers something this analyst calls a data blackout. Think about it. The market feeds on data. Inflation reports, jobs numbers, you name it. A shutdown puts a stop to that. All that crucial data gets delayed. Suddenly, there's less transparency, way more uncertainty, and investors are left flying blind. It gets really hard to price anything correctly. But this is where the analysis takes a really interesting turn. Normally you hear government shutdown and you think, okay, chaos, uncertainty, people are going to panic sell. But this analyst, they're saying something different. They're arguing it's basically a scare tactic, a move designed to shake out the retail traders, to create fear, but that ultimately it won't have much of a real lasting impact on the price of Bitcoin. All right, now, buckle up, because this is where things get really wild. We're about to go down a rabbit hole of deep geopolitical theory, connecting some dots that, well, you probably wouldn't expect to see connected. We're talking geopolitics, oil, and, yes, Greenland. The whole thing kind of rests on this one pretty unconventional idea. I'm just going to quote it directly from the source material. I don't think that the Trump will release the pressure from Greenland and all European Union. Okay, so what on earth does that mean? Let's try to piece this together. So, according to this analyst, here's how the chain reaction supposedly works. First, the U.S. puts pressure on the European Union over control of Greenland. Okay. Then, step 2, U.S. aircraft carriers get positioned near Iran. Step 3, a potential conflict, maybe even a manufactured one, is used to block the Persian Gulf. Now, here's the consequence. Step 4, that action cuts off the EU's main source of oil. And that brings us to the end game, step 5. With their oil supply choked off, the U.S. suddenly has massive leverage over the EU, which brings everything full circle right back to that initial pressure over Greenland. I know, it's a lot, but that's the theory being laid out. Okay, so we've gone through the Fed, a potential shutdown, and a global geopolitical chess game. So what's the bottom line? Let's get to our final section, the actual market forecast. This is where the rubber meets the road, and the analyst tells us where they think things are actually going. So for anyone in crypto, what's the big takeaway? The core idea is pretty simple. This analyst expects prices to continue to push higher for a bit, right up until we hit a big market-wide correction, which they're pegging for the first week of February.
And here's a quick breakdown of their short-term calls on different assets. For Bitcoin and Ethereum, the forecast is up, leading into that early February correction. They've even got a price target for Ethereum around $3,200. Now, what's interesting is they actually see gasoline prices heading down and think gold and silver are about to have a correction of their own, waiting on what they call good news from the Middle East.
So if you're keeping score at home, here are the key dates to circle on your calendar according to this analysis. You've got January 28th for that Fed meeting, then January 30th is the potential shutdown deadline. After that, keep an eye out for that predicted crypto correction in early February. And looking even further ahead, they're watching for some kind of Supreme Court news around February 20th. And all of this kind of brings us to one final big question. After wading through Fed speeches, government shutdowns, and these really sprawling global theories, it really makes you wonder, doesn't it? In markets this complex and interconnected, where do you draw the line between sharp analysis and just pure speculation?